Hi, I'm Dave Dinkel here with a 2-minute special series tips on most frequently asked questions by newbie investors. This one is an objection, and I'm going to say an excuse, that all the properties go to hedge funds and institutional buyers. It's silly. I hate to say it, but it's silly. And who do you think sold those properties to the hedge funds? We did. We as wholesalers sold them. Blackwell owns 40-some thousand properties. They've been liquidating some of them the past few years. Who do you think sold them the 40,000 properties? We did as wholesalers, not we personally. They were a very large client of ours when they were buyers, and now they're sellers. Who do you think is buying those properties? Well, if they're not listing them on the marketplace, they're selling them to us as wholesalers. Why? Just because they are. One thing that people don't understand about hedge funds is the people that make the money are not the ones that put the money in. They're getting a return on their money of a certain percentage. The people that make the money are the hedge fund operators. And to make money, the investors have to make money. And there comes a time when if you sell all the assets, how are they going to make money? They're going to put the money into a bank at 1%. They're going to put it into treasuries at 1/4 or 1%. They're going to put it into foreign risky stuff? No. Are they going to put it into the stock market? Definitely not. So where is the hedge fund manager going to go to after he liquidates his portfolio? Now what some of them have done is they've come to the renters. They bought houses, put renters in, come to the renters and said, guys, we're going to do a mortgage and note, so then they can exactly know how much income they're going to have and expenses and so on and so forth. And you're going to be the owner of the property. And by the way, we don't even need an appraisal. We're going to give you this property you're already living in for $1,800 a month. Otherwise, you'd have to pay $2,000 or $2,400, and you wouldn't have the pride of ownership. Now, how did that work for them? Yeah, miserably. I'm sure they got some of them to work, but now the hedge fund operator is saying to himself, man, I can't perform at the levels I did because I had a rising market. I got an equity kick, plus I had income on it. What do I do now? What they're doing is they're liquidating assets because they don't make money unless they take profits. And they're putting it into other investments. What are their investments? Hard money loans. Hard money loans have come down from 12, 14% to 8 or 9% because of this giant influx of money. Remember, I'm a transactional funder of one of my businesses. And when I do a transactional funding, sometimes the end buyer is coming in to do a rehab, for example, and he's getting a hard money loan. So I get to see the terms and conditions and so of a hard money loan. Some of the hedge funds, I'm not going to say what state they're located in because you know who they were, they're giving silly, stupid money out to properties, remember, it could be at the top of the market at ridiculous rates because they have to put them out. They have to put the money out. If that money is not returning a certain amount of money, and you can't get that in liquid securities, then you're going to have to take whatever the market bears. And it's been pretty interesting to see how hard money rates have come down. And again, if you're saying to me, well, the hard money lenders in my area are still getting 5 points and 15%, yeah, because they're in your area. Go look online and start applying to some of the national hard money lenders. And you'll see you can get some really good rates, very low interest rates, and for extended periods of time. Just do not live in it. They will not loan to somebody that's going to live in the property, I'm telling you ahead of time. So to say that hedge funds are, buying consortiums and various things like that, or taking all the properties, it's more than an excuse. It's stupid talk because they do not have the money to buy enough houses to make an impact on the market or in one specific area. Remember, they don't go looking for the properties. They go looking for people that have them for sale. And what they do is if you call them and say, I'm a wholesaler and I want to sell you some properties, everybody calls them, but they send out a list. And the list says it has to be a 3-2, it has to be so many square foot, it has to be this, it has to be that. Well, gee whiz. All you have to do is get the list and then go and look in the neighborhood you're prospecting for something that qualifies. And then go to the homeowner and say, by the way, are you thinking about moving? Oh, it's funny you asked me that. I was thinking about moving. Well, that happened to you. If you do it enough, it will. What it does give you, though, is that even if it's a listed property, it will give you a criteria for which you can shop. And if you have a service that goes to the public records and gives you all those criteria, you can find them yourself. Why doesn't the hedge fund do that? They don't do that. That's not their job. Their job is placing money. To do that, they'd have to have staff and take the risk of, well, it's not working for us. It's bogus. It's bogus, and it's an excuse if somebody tells you that professional buyers are buying everything and holding them. See you in the next 2-minute tip.